A huge legal clash over weight loss drugs is unfolding, which is HIMSS' biggest growth driver. So is the 35% sell-off we've just seen justified, or should we be buying this cheap stock right now? That's what I'm going to answer for you in the next few minutes. First, I'm going to walk you through what actually happened here, what impact this has on HIMSS revenue, best and worst case scenarios, so you're the best informed investor out there. That's always my intention. And then we'll look at, and that's probably the most important thing, we'll actually look at the stock chart, and I'll tell you what Wall Street's legends would be doing with this stock. And not because I'm one of those, no, but I've had a lot of mentors who were those legends, and they've taught me their rules. So I want to walk you through that as well. So what the heck happened? Well, Novo Nordisk, the lovely Danes, ended their partnership with HIMSS, which only was announced in April. Novo accuses HIMSS of illegal mass compounding and deceptive marketing of Wegovy copies. HIMSS stock dropped 35%, Novo dropped 6%. Why? Well, the FDA ruled that the Wegovy shortage is over. That was in February, which then banned most compounded sales of this product, which is essentially semaglutide. And that ban came in by May 22nd. Now, HIMSS continued selling personalized semaglutide fat loss drugs, which Novo claims violates the law. HIMSS sales from those weight loss drugs were about $200 million in 2024, which is about 13%, of their total revenue. Now, why does this matter? Because these fat loss drugs are the fastest growing sector for HIMSS. So yes, it was only 13% of revenue last year, but it could be like 30% of revenue this year. And that's mostly these GLP-1 and oral kits that everyone, who wants to lose weight is apparently taking, because eating less pie and going to the gym, out of the question. Half the audience just left the room. So we're expecting $725 million of sales this year of these fat loss drugs. Apparently the gym really wasn't an option, which would be 30% of the expected 2025 revenues. You're starting to see why this is such a big deal and why the stock's down this much. Now, do they have other sectors? Yes, and I'll try to put this on the screen here for you. They have 125,000 mental health lunatics, which is growing at a triple-digit rate. If you're walking around on the street, it isn't exactly surprising. And by the way, I'm a huge proponent of mental health treatment. I'm just joking, right? So they're bringing in about 100 million of that, 7% of revenue last year from the loons. The STD crowd, the sexual health crowd, the core offering there is about 400 million of revenue, which is almost a third of revenue, growing steadily, not like explosively like the fat loss camp. They also have dermatology, so the skincare products, that's about 13% of revenue. So that kind of creates a nice little pie there. Hair care is another 10%, which again is growing, but at a much, much slower rate. So what's the worst case scenario here for HIMSS? Well, if we get legal action from either Novo or the FDA, they could get fines, they could get sales bans, and they could lose their weight loss drug revenue, potentially 30% of revenue this year. It also erodes investor trusts, because we don't really like it when our companies do illegal stuff. Now, it's an allegation, it isn't proven, right? And it would definitely slow down growth very, very significantly. Now, is it going to go bankrupt, as some titles I've seen on social media out there? No, it's not. They've got $1 billion in cash. They've got a good business across lots of other sectors. It's just one sector that we're hoping is going to be about a third of their revenue this year. That is now at risk, potentially in full or partial. But overall, their sales are robust. So I wouldn't really worry about it too much. Now, what about NVO? What about our little Danes? Are they going to be in trouble? No, they have insanely good sales growth. Their partnerships with Roe and LifeMD are intact. And yeah, the stock dipped like 6%. But that's more like a reaction. It isn't really long-term damage. So I don't think that's a big issue there. So what about HIMSS? Well, I mean, there are new sectors. There's heart health, there's sleep, for example. There are other opportunities. And HIMSS could shift to selling branded weight loss drugs or other weight loss solutions. You could therefore retain some of their market share. And so there is a lot of stuff there that's still good for HIMSS, the whole AI-driven personalization and so on. I think there's a lot of stuff that's actually in HIMSS' favor. But if you look at the stock chart, and I want to to get you through this, because this is the most important part to me. And really, if you want to understand this, like, why did I draw that red box up there? I didn't draw that box here today. I drew that box there probably a week or two ago. And you can go back to my videos and check that, because I always do this live. That was the resistance. So that line there told you the resistance, because these were like the highs right there. So let me get a pen. And if you understand some of those little intricacies, like why this is a resistance box and so on, then you will know when to sell things and when not to buy things. So if you want to actually learn that, then I've put together a little 15-minute video for you. It's completely free. You'll actually learn those rules, like when do we buy, when do we sell, how do we automate the whole thing, and that will help you, in my humble opinion, tremendously to do much better. Now, for this little chart here, so it's dropped a lot. It's below the yellow line there, which is the 50-day moving average line. That's bad. It's still above the 150, which is somewhat good. So for long-term investors, that might be okay, maybe we're still in this, maybe we're still waiting. But the sales volume here was tremendous, right? It's like the biggest volume candle we've seen, well, bigger than the ones in May that led to the rally up. And that's not a good thing. So what can we do? How do we know whether we should buy or sell it? Well, I'll tell you what my rule is in just a second. But first of all, we can look at what institutions are doing. So we have access here in Trade Vision, which is a tool that we built, which gives you access to dark pool data, which is what the institutions are doing, because they don't trade on the exchange like you and me on the stock market. They do it in private exchanges. And, well, they were fairly bearish yesterday. And no massive call buying going on here. There's a bit, actually. There is a bit. So there are some people who are seeing this as an opportunity. What calls are they buying? $40 calls, $50 calls. So they are being quite conservative, except for that one there. But that you never really know what that's all about. That could be some sort of hedging strategy. But my rule is, and let me refer you to UNH. And again, I'm not saying the same thing is going to happen, but they had that drop, right? They had that massive drop. And then we went lower, we had another drop, and we're still down here. So for me, the rule is that every single stock has a stop loss. And that stop loss never gets moved down. It only ever gets moved up. So if we're in something that's beautifully rallying up, then imagine this little red line here is our stop. Say it's here, and then we move it to there, and then maybe we move it to here or somewhere like that. And then when we drop, it means we sell. And we're very happy about it. And even if, in hindsight, it does decide to recover and go up, I never feel bad about it. I don't look in that mirror because it's pointless, it's meaningless. The key thing is, do we, from our buy point to our sell point, do we make money? If you do that, and you do that well, and you do that repeatedly, you will live a very, very beautiful, free life. If you think about, oh, this is the one opportunity that everyone's talking about, let me FOMO into this because now it's cheap. Well, they're going to be lawsuits. You have no idea what they're going to do. You don't know what the outcome's going to be. It could take a long time. It could take a short time. The FDA could come down on them like a rock, or maybe there won't be anything. We just don't know. There's a lot of uncertainty. So I found about 50 or 60 stocks on Sunday that I would potentially want to buy. That's how many opportunities there are every single week. And none of them have anything to do with headlines. So I would simply follow a rules-based system and forget all the noise, forget being in the latest thing. It doesn't matter what stock you make your money with, right? Like, we make money with boring stocks that no one's ever heard of, like this one here, Ava, for example, right? Which some of my guys are still in this, my students, and they are now up 250%. I sold here at 80% up. And I'm, again, not bitter about that at all. No, in all honesty, I'd never actually looked at it again afterwards. Just when people said to me, hey, thanks, Felix, I'm up 200%. So again, I'm not promising you outcomes like that. I'm just saying it does not matter what stock you make your money with. So being in the latest thing is usually a bad idea, because either it's usually overvalued or something terrible has just happened, which just means there's a lot of uncertainty. So from my point of view, remove the uncertainty with just rules, and then you don't have to have these conversations, you have to think about it. You don't even have to watch these videos anymore. Wouldn't that be nice? So go and learn the rules. felixrenzelog.com/get free. Get yourself free. Get yourself a system. And if you got some value out of this, share it with a friend. All the best. Tom Lee just called the Fed's bluff by outlining the 4-step path that they always take, which, if you understand it, puts you about 6 to 9 months ahead of everybody else out there. And I'll give you also 4, even 5 major beneficiary stocks here and why.